Good afternoon, welcome to this weekly market update from AGM Markets. Today is the 9th of January 2013, the first update from the new year. What we'll do today is go through some technical analysis on the euro-dollar cable, dollar yen, dollar Swiss, euro sterling and gold. So quite a few pairs we'll go through today. And yeah, just purely sticking to technical analysis. I will have a go through the weekly calendar, see what we've got coming out for the rest of the week in terms of economic data, but the main focus is technical analysis. Won't be giving any trade calls recommendations. This video, you trade at your own risk. If you could please read our full disclaimer on our website, www.agmmarkets.com. Okay, then let's have a look at the euro dollar. This is the. I won't look at the weekly charts. I'll stick to daily and shorter term, because otherwise we'll be here forever. But yeah, so here's the daily chart. What I'm purely I mean, you should always look at the first thing that comes to your eye. So the first thing I can see is this daily trendline support. You can bring that in a little bit, and there you go. You've got a lovely trendline support, and that's still technically holding. And you've also got the moving averages below here. So you've got the 200-day, you've got the 100-day moving average, which is pretty much coinciding with this trendline support. It's literally right on it as we speak. So that's a lovely confidence level of support there. If we flip it to the fibs, I mean the recent dip from that low to high there kind of coincides with 50% retracement. We also had the 55-day moving average there. So you can see we're kind of in an up move, but all I'd really be focused on in terms of technical analysis is this daily trendline support. In terms of daily chart, that's all I'd really be focused on. If we flip it to the shorter term time frame, then you could also bring another trendline support here and make it a little bit tighter. So that's what we're sitting on at the minute. It is, I mean, it's a lovely little uptrend you got, especially look at that daily there and then flip it to the 4 hour. It's very, very bullish. We're literally just grinding higher and higher. I mean, the thing is with euro dollar in terms of fundamentals is that there's no real bad news coming out at the minute, and when there's no bad news coming out, that means that the euro just grinds higher. It only goes down on bad news. If there's no bad news, it will just continue to grind higher, and that's what we're seeing here on the euro dollar chart. In terms of a shorter term time frame, what I'd look at, especially for sort of today, tomorrow, in terms of a fib, no, well below that. I mean, I'm just on the fibs. I've just got the 50% and 61.8. But yeah, I'd literally just still keep it to this trendline support. So you can see it's looking a little bit heavy in terms of a bounce off this. We've had a nice bounce, and now it's starting to sell off in terms of 4 hour. I mean, that 4 hour there, you can see the 200 bar moving average there, capping it as try popping back up. We start to sell off. This current 4 hour candle as well is very bearish. We're starting to look a little bit heavy, so we could indeed get a break of this trend line. I mean, yeah, in terms of the 1 hour, nothing massively of interest, but in terms of the rest of the week, it's all about these trend lines for me, really. That's the only thing I'm really focused on. I mean, yeah, especially in terms of the 1 hour and 4 hour, I would literally, I mean, what you could do from this recent dip, I think I put this on a minute ago actually. Yeah, this is on the daily chart. This is the big fib, so yeah, if we flipped it from there, you can see it a bit more clearer, but that's what I'd really, that's how I'd have my chart set up, to be honest with you, and just look for, I mean, if there's a nice sort of reversal candle off any of these trend lines, then you could look to go long, and if we get a daily candlestick close below the trend lines, then it could start to sell off, but it's still in an uptrend. Let's have a look at the cable chart. This is the daily. First thing that springs to mind is this trendline support, and that's starting to break there. You can just see we are starting to break that. So the next support, if we do continue to go lower on this chart, would be the 200-day moving average, and that's at around 1.5876. And the next thing I would look at is this fib from lows to highs there. Yeah, so we had this big spike high. You can see that high I've drawn up there. It's a real big spike there. I can't remember what that was from, but anyway, if we zoom in a bit, you can see that we were this 61.8 was holding quite nice. You can see the few sort of candle wick spikes around that 61.8, and now we're well above it. So it could come back up and close above, but it's all about daily candlestick close. If we don't close above that 61.8, then I wouldn't be surprised if it continued to sell off, and that 200-day moving average is what you want to look at, or that low that I've highlighted there, which is the 100% retracement. That's at 1.5828. So that's how I'd keep my chart set up on the daily. If you're looking at 4 hour or 1 hour, you've also got a shorter term trend line there on the 1 hour, where a lot of people will be looking to just sell into any sort of rally, really. I'll just redraw that. It also coincides that 55 bar moving average. Can you see that there? So you can see that we tried to bounce off this 61.8, and then the 1 hour candle there. 3 of them all touched that 55 bar moving average and all reversed off, and that's why we start to sell off. So that's why you can see these moving averages do work on all sort of time frames. This is a classic example of how you can play them, just pure sort of reversal candles off the moving averages. So that one there, nice bearish candle, you can sell then, and then you've got what, 4 bearish candles in a row there, so you can make plenty of pips. But no, in terms of the daily chart, that's how I'd keep it set up. In the 1 hour, that's how I'd keep it set up as well. But no, quite an interesting chart, nice and technical cable. But in terms of longer term time frames, the daily chart, it's all about that daily candlestick close. Okay, let's have a look at dollar yen. Very, very bullish chart on dollar yen. Nothing massively of interest for me, to be honest with you. Because it's just, I mean, all I would be looking out for is some sort of buying opportunities. Just buying on the dip, but it's been so bullish, it's due a nice healthy retracement. So you've got the trend line there, and then literally 4 hour still miles away. I mean, the 4 hour, we've had a nice bounce off the 55 SMA, but I really wouldn't want to be buying right now, in my opinion, just because I personally think it's just due a nice retracement. You could look at selling up from the sort of top of the channel here, draw a trend line from the highs there, but no, nothing massively of interest to be honest. I think there's better, more technical charts to trade than dollar yen currently. Dollar Swiss, first it springs to mind as we're on euro dollar, we've been saying for sort of in the whole of last year, I've just been saying how his charts completely correlate in terms of just doing the complete opposite thing. So on euro dollar on the daily chart, we did a nice trendline support, and on dollar Swiss you can see we've got a nice trendline resistance, and you can see that it's been bouncing now. So I mean, you've got a nice confluence zone here. So you can see we've got trendline resistance and 55-day moving average. Prime sell opportunity we had there. A nice reversal candle off the 55-day moving average and off of this trendline resistance. You can see we've got a few sell-offs there. Not a massive sell-off, but you never know, it could come up and test it and then come back down again. But that's what I'd really focus on my daily chart. In terms of 4 hour, what I'll be looking out for is this recent fib here, from highs to lows. It didn't quite come down and test that 50%, but it was quite near, and you can see we now bounced above that, and we're also above this 55 bar moving average on the 4 hour chart. And you can see we've got a lovely reversal candle off of this 200 bar moving average as well, so we closed above that. A nice, not a reversal, nice continuation pattern, sorry, off this 200 bar moving average, and it's looking to grind higher. So in terms of the daily, the big level really is that 55-day moving average. You can see on the 4 hour, if you're long already, then the first sort of target area could be that 55-day moving average around there. But no, interesting chart that, especially, I mean, if you trade euro dollar, you should definitely look at dollar Swiss as well, and just see how they correlate, because they may have a different, I mean, for example, there on the dollar Swiss, you've got the 55-day moving average as a resistance. So if you flip it to if you get a reversal candle on there, then that could be a nice buy opportunity on euro dollar, etc, etc. But no, very interesting charts those. Euro sterling, we haven't we looked at it in the last video. We'll look at it more this year because it is an interesting chart, especially if you trade euro, dollar and cable. It's one to definitely look out for. In terms of this daily chart, you can see we've got a nice trend line support here, which is also coinciding with the 100-day moving average. On the 4 hour, what I'll be looking out for is the trend line support we have on this, and a nice bullish chart as well, very similar to euro dollar, just a solid sort of uptrend, really just ripping towards the upside. What I would be looking at, I mean, this bounce here, was this a nice fib bounce, or just, no, it wasn't, we're not off the 61.8 anyway. You can see it's getting a little bit sticky at the minute around the 55 and 100 bar moving averages on this 4 hour chart. It could continue to rip to the upside, or it could be due a nice retracement as well. So on the 1 hour, what I'll look for, if it does continue to retrace and look for any sort of buying opportunity, you can draw a fib from the recent swing low there to the highs, and the 50% comes in at around 0.8123. But it is looking a bit heavy, to be honest with you. But no, it'd be an interesting one to look out for. But I mean, I personally prefer the euro dollar chart. I think it's a bit more interesting, but it has been very technical, this chart, so keep an eye on that. Sometimes you can get a nice signal on here just to trade euro dollar or cable as well, because remember it is euro versus the pound. So if you get a nice buying opportunity on euro sterling, then it may be a better buying opportunity on euro dollar instead, etc. That's it for the forex. Let's have a look at the gold chart, everyone's favourite commodity. What's going on gold then? It has been quite choppy the last sort of few weeks, but the one thing, I think we spoke about this in the last video, this is the clearest fib opportunity ever, or fib setup really. So I mean, from the clear swing low there to the swing high on this gold chart, bam, right off the 61.8 level, had a big spike. Then it's looking to grind higher, but as you can see, other fib levels can act as resistance, and you can see at the minute this 50% level is acting as resistance. We did get a nice close well above these levels, and then it just sharply reversed that bearish engulfing candle, closed just below the 50%, and we've come down, tested this 61.8, and now it's getting caught up at this 50% level. So it's very, very choppy at the minute, just chopping in between this 50% and 61.8% range. So if we're going to get a nice break towards the upside, then we need to close above this level, and then this 200-day moving average. Then the next target will be the 55-day moving average at 16.98. But if we are going to get continued sell-off, then I definitely want to close below this 61.8% level, and preferably below that low there as well. The other thing I'd keep an eye out for is the trend line resistance here. If we do get any big rip towards the upside, that's one to definitely look out for, because that's been playing out very nicely. But no, that's all I'd really be focused on, because I wouldn't really, I'd only personally want to get in gold if we get a nice clear bias either towards the upside or downside, and we're going to get that if we get a daily candlestick close above the 200-day moving average here, or below the 61.8%, or preferably the low there. So for me, it's just in between a chop range, but there's still going to be opportunities out there if you're a shorter term trader. Okay, that's all for the charts. Let's have a look at the forex calendar. What have we got coming out for the rest of the week? So tomorrow we've got a lot of data coming out. We have UK rate decision at 12 o'clock, the MPC rate statement. At 12:45 we have the Eurozone rate decision. They're both of them expected to stay the same as well. With the ECB press conference at 1:30, with the weekly jobless claims out from the US at 1:30. And on Friday we have UK manufacturing production numbers at 9:30 AM, forecasted at 0.6% from the previous poor numbers at -1.3%. So we're expecting a big rise in manufacturing production there. And at 1:30 to finish off the week, we've got the US trade balance data, so that's forecasted at -41.1 billion from the previous -42.25 billion. Okay, then that's all for today. I hope you've enjoyed this video. Have a great rest of the week trading, and I'll catch you next week. Thanks for listening.